And welcome out to Tackle Trading's daily halftime report. And Matt, I've got Coach Matt, Coach Tim, and producer Cody here. Markets are hesitating. Markets are pausing. Markets aren't doing much here today, Matt. So we're going to focus on Theta Thursday, where we identify a cash flow strategy. And today, I think we've identified the bear call spread we're going to build some on. First off, how you doing this morning?
Doing really, really well, Tim. Excited to be here with the halftime crew and to go through the halftime report today.
Yeah, for sure. If you're out there and you're a brand new trader and you are definitely new to our Tackle Trading site here on YouTube, make sure that you subscribe and click the bell and become a member of us so you get alerted for future videos. Every day here in the halftime report, what we do is we go through our market routine. We look at the news, we look at the key markets, the S&P, all the different indexes, the commodities, the currency markets, and then we always have a feature. Going to have a lot of fun here today, Matt. That doji is right at a pivot point, by the way, on the S&P. We're flat in the middle of a range that we've been developing now for about a month and a half. Does this put you more in a neutral category?
Yeah, I said it yesterday. With the response that the market had to Jerome Powell's speech, I was already in the neutral, to be honest with you, with the market coming into a support level last week. Obviously, if the market breaks support, you go back into bear mode. But with the market kind of sitting at support levels, we're kind of in that neutral capacity. Nothing really happened yesterday, to be quite honest, that got me off that neutrality, Tim. I'm still not buying into this belief that the Fed is going to only raise one time next year. I think the market overreacted to the news, Tim, after reading into it a little bit. He obviously did change the language from October to November, and this is Fed 101, and this is kind of what makes me upset with Jay Powell, because he has been very transparent. But what I saw yesterday, and after reading all the tea leaves, Jerome Powell bent the knee a little bit, Tim. He gave in a little bit to President Trump. He cowered. He bent. I don't like it, but he did do it. And is it just political to get him off his back? Is it something I don't know? But he did change the language, and very, very simple language, but it means a lot when it comes to understanding the Fed. In October, Jerome Powell said basically that they were a long way from neutrality. That's what he said in October. Mm-hmm. And that gave everybody in the market an indication that they were not going to raise in November, but they were going to raise in December, and then they were going to raise 3 basis points coming into 2019. And then yesterday, he said basically we're just right under neutrality. And that might seem like just to a normal person, like, mm-hmm. Not that big of a deal, right? That just under versus a long way. But when it comes to interpreting this, the central bank and the chairperson of the central bank, it does mean a lot. Their words mean a lot, and Jerome Powell knows that. Okay, but I still think it was a little bit of overreaction to this hope that all of a sudden they're not going to raise interest rates in December, and they're only going to do one interest rate hike in 2019, which is now the market is kind of pricing in. I still think they're raising in December, and I'm still projecting a 2 to 3 time interest rate hike in 2019. Whether or not that happens, nobody knows. But I do think the market overinterpreted just slightly what Jerome Powell said.
I'm sure Ben Bernanke somewhere is nodding his head and saying, laughing. Yeah, he's probably laughing, saying, yeah, Jay Powell, you acted tough when the market wasn't selling, and now here we are behind some volatility, and all of a sudden you're changing your tone. So I get it. And Matt, by the way, if the market sold off very aggressively, I'm sure the Fed would change their tone, even from what
of course they would
before. Of course they would. Yep. They do respond to market volatility. Here we're sitting on a doji Thursday afternoon. The headlines here today: tech weak, healthcare strong. You have a mixed market. Nothing really running crazy though. There are some individual companies that we're going to break down from here, Matt.
And Tim, let me say this again. A lot of times when you see these types of big moves, and it doesn't have to just be up or down, the following day usually is a little bit of a, let's take a little bit of a break here, right? Mm-hmm. I mean, look at this. You have a very strong move coming off the 200-day moving average, and what happens the next day? And I remember this day, Tim. I remember that day, and everybody's like, oh, man, Christmas rally's starting. Yeah, everybody buy off the 200-day moving average, and the following day it's a doji, and then we come back down 8%. And then this day, oh, man, we're coming back up above the 200-day moving average, and everybody's a little premature with it. They're like, buy. Twitter finance is losing their mind. Like, everybody should just buy because they don't know how to sell. So in terms of that, but you're looking at, okay, it's smack dab right into resistance, right? Following day, nothing happens. Big update, or same thing on the downside. Look at this big downward movement. Next day, really kind of nothing. Big down day, really kind of nothing. Big update, kind of nothing. So a lot of times when the market has one of those big rallies, or a lot of times when it has those big market sell-offs, the next day doesn't have a lot of follow through. It's like the market's just kind of in that wait and see approach. And all the headlines are going to be this, Tim. Every single headline will be market taking a pause, waiting for G20 summit, right?
Mm-hmm.
That's what all the headlines are going to be, because you got to write a headline, right? And maybe that's somewhat true, but you can say that about every second in every market. Once an event is over, the market's always fixated on the next event, correct?
Yeah, and in some ways, obviously we're going to be forward thinking at all times in markets. We're always looking next because the other stuff is behind us. But
Yeah.
don't you think the current market condition kind of reminds you of 11.2 right there? Obviously a much more volatile candle on 11.2, but on 11.2, we had a bear retracement setting up. We had a hesitation candle. The market didn't know where to go. And then it took off for 3 days only to sell again later in the month. So I don't think anything that happens here, you can't call it definitive one way or the other.
You're not out of the woodworks in any capacity until you ultimately break this level of resistance at 28.20, and ultimately you break the support level at 26.25. So as long as we remain in that neutrality, Tim, you got to call this neutral. Now, if the market's at resistance showing weakness, will I have a slightly bearish delta? Absolutely. If the market's at support, have it showing weakness at support, or strength at support, if you want to put it like that, will I have a slightly bullish portfolio? Absolutely. Right now, I'm neutral. You're right down in the smack end of the range. Now, remember what I said yesterday when we were looking at that intraday data, Tim?
Mm-hmm.
And we were looking at that intraday data kind of into this range right here, or it was this intraday data right here. I said, okay, if you break this level, where are you going? I said you're going to 2750. Well, as you break out of that high base, you come up into that 2750 resistance channel, kind of slows down around 2745. Well, why did I say that? Well, 2750 is resistance. So if you break 2750, could you see price appreciation continue? Absolutely. You could see it go all the way up to 2764. You break 2764, 2800 to 2820. That's where the market should go in those capacities. So keep an eye on 2750. Keep an eye on that 200-day moving average, and then ultimately the higher end of resistance at 2800 by 2820.
One of the big things that will be happening here in about an hour and 20 minutes is the Fed will be releasing their minutes. I usually read that after the bell. Not everybody's an economics nerd like you are, Matt, and me as well. So I get it. Do you recommend anybody out there go and read that, or should they just look at the headline? What's your take?
Come to the halftime report tomorrow. We'll talk about it.
We'll interpret it for you.
No, those things are really hard to interpret. And for someone who doesn't understand Fed speak, it's like, how do you even understand what language these people are even writing in? Right. Mm-hmm. I mean, they talk in code, they write in code. So yeah, do you want to read an article? I'm sure there'll be an article on Market Watch or FinViz or whatnot like that will kind of summarize the data. Can you read the FOMC meeting minutes? Absolutely, but those are boring. So read an article, come to the halftime report. We'll talk about it.
Top 5 gainers on the S&P today: Dollar Tree, Nielsen Holdings, Qualcomm, Arconic, and Activision Blizzard. DLTR, I'll give you an example of what happens in these markets bouncing off of lows. DLTR and ATVI, they're both coming up nicely, about 5% on DLTR, by the way. It's nice breakout potential, Matt, but not anywhere out of the woods, though. I would not call it, because even if you do break, you've got those old gap points that are going to come into congestion, as well as falling 200-day moving average.
Anything on DLTR, you got to wait till it gets back above and confirms off the 200.
Mm-hmm. ATVI, we talked about this one. This is a really interesting chart pattern, in my opinion, because you have the gap down, the runaway, the sell-off, the pressure, and now you're coming back. 2% gain today actually is coming into these falling moving averages and trend lines.
Yeah, I'd say
your retracement.
Bear retracement coming back into 55. Keep an eye on Activision, how it responds off 55. If you can get above 55, Tim, you should see this gap close. If you get into 55, slow down. That's a good bearish retracement. So 55 is kind of that number you're looking at.
Sure. Qualcomm, QCOM, I should say. Qualcomm, obviously, as well. Bear retracement coming back into the old gap point. Good rally off the bottom on a lot of these markets that we're selling. That's where this market
I
is
will
finding
tell
some
you,
play.
Tim, this is a standard bearish retracement. Well, I don't want to say standard, but I typically don't love rolling rounding retracements.
Mm-hmm.
Right? So it's coming into here, and you're kind of forming this low base, and that keeps that rounding bottom. I usually try to stay away from rounding bottoms when it comes to shorting.
Yeah, it does have some strength in there. It's obviously not a textbook bear retracement, but you are coming into some pressure to the downside as well. Not shortable or tradable to the downside today on that pattern, no doubt, but I wouldn't be bullish yet either. Give me Abercrombie and Fitch, ANF. Is this the store you used to work at?
No. No. No, I can't remember the name of it. It either started with a B or a D or something like that, but it was like an Abercrombie, but it wasn't like Abercrombie for like that. But I don't know. I only worked there one day and got fired because I didn't know how to fold a thing and wanted to go play softball.
Revenue, profit, and same-store sales beat on earnings, gapping up. This is the kind of thing where you could sell off of the volatility. I use these types of gaps, Matt, for potential entry points. Price of Abercrombie there, what is it, $20? Doesn't make it great for a bear call. I usually like a little higher price stock than that for those types of conditions. But liquid gapping, we talked about gapping about a month ago on the halftime report, did a deep dive on that subject. How would you label that gap right there?
Exhaustion gap.
Yeah, I think so too.
The reason, and it's important to interpret a gap, reading the intraday activity after the gap is really important to understand the personality of that gap. When you have a gap that breaks out and then immediately starts selling intraday, that typically tells me that it's an overreaction to the economic event, the earnings event, whatever it is. It comes back down in price. A lot of times those fill those gaps. So I would interpret that as an exhaustion gap.
And I believe Adam has it. It was the Banana Republic that you did work at.
It was Banana Republic. So I knew it started with a B or a D. I knew that. Yeah, Adam, one day the woman manager, this back when I was in law school, and I believe I was like 21, 22 years old at the time, was married, had a child on the way. And so I needed a job while I was in school. And so I went down and I had a friend that worked there and they got me a job. And I was there for about 2 hours, Tim. And I got heavily criticized on how I can fold clothes. And then I said, well, I got a softball tournament anyways. And she goes, well, this isn't working out.
Yeah, you were not Banana Republic material, apparently.
No, I wasn't.
Yeah.
I wasn't.
Some of the brick and mortars, kind of tying it all in, are actually weak here today. Kohl's KSS, a discount retailer, big box type retailer, down actually Matt, put that on a list for bear retracement right there. Let's run the numbers on this later in our show when we do our Theta Thursday. KSS.
Good bearish retracement right there.
I do like it.
And again, going into teaching mode, see the difference? There's no rounding bottom. Comes down, retraces back up, confirm back down. Yeah, that's a good bearish retracement.
Yeah, put Kohl's on a bear watch list for sure. JWM, Nordstrom's, a very good company in my opinion. When I do go to the mall, I will stop in Nordstrom's. I buy stuff from there quite often, and it is down as well. A lot of these brick and mortar retailers, Matt, and that's actually a good bear retracement too. They're just, all that online sales stuff that happened on Black Friday and Cyber Monday and people going directly to the websites instead of the stores, I think is hurting them in some regards. Some of the companies navigated it better than others. And I think, give me Walmart. I haven't looked at Walmart.
That's a better retracement than even Kohl's.
Yeah, KSS and JWN. We'll run numbers on here in just a minute. Yeah, I like them both. Brick and mortar getting hurt here today. Give me Walmart real quick. I have been impressed with Walmart's online presence lately. I think that they are doing a better job. Their advertising, their marketing. I do think that they are the kind of company that's trying to not just be that brick and mortar thing and get into the Amazon style ideas as well. Beautiful candles on Walmart. It's not tradable. When it didn't hold those ranges we were looking at about 3 weeks ago, it kind of got me off of it until it breaks back up. Yeah.
I mean, I'm not going to do it just simply because you're got a solid support level right here, but the projection has to be back down to 94.
Mm-hmm. Yeah, I would agree with that. I'm looking here as well. Macy's.
Inverted hammer off the 50-day moving average. That's not a hard call.
It is, but that big green candle the day before, I think we already found two other better candidates.
Like the big green candle in the market.
It's true. I
Like the
get you.
overreaction Wednesday.
Well, I get it, but you have limited resources in trading, right? You only have so much capital to work with. And let's say that you've got
I said, quote, I'm not shorting it. I did say that. I'm saying the projection has to be back down to 94, though.
Yeah. Yeah.
I was just responding to your beautiful green candle. That's all I was doing.
I like the upward action there. And I do like the company. So I may have a bias there.
On this?
Go ahead.
You want to put a steak dinner on this?
Well, I mean, how many steak dinners
in the next 4 trading days?
No, I'm more bearish on the market than you. So I'm not going to.
Beautiful green candle.
If you've got limited resources in retail, the other 3 that we already looked at look better bearish than Walmart, correct?
Yeah.
All right. Agree to disagree. I don't even know what we're disagreeing on at this point. 2 brothers. This is the way we are. And no, I don't want to put a steak dinner. I got to pay up on 1 steak dinner right now, get us back to break even. Yeah, and then we can bet more steak dinners. Align Technologies down 3% as well. ALGN. Give me that one, Matt. 227. That's a neutral type pattern. No trade there. Interesting action in the S&P today. Let's go on to the Dow Jones Industrial. Look at the big cap, large cap, mega cap type stocks. Boeing, United Health, Merck, McDonald's, Pfizer, all up. Intel, American Express, United Tech, Goldman Sachs, and Visa all down. It's neutral for me. Yeah, I'm neutral. I'm looking at the advanced decline. Only 10 companies going up here today, Matt. 20 going down. You might have some internals that are relatively weaker than not. What is the actual percentage?
I don't think you can read anything in today's price action. Advancers, decliners. It is a neutral day. It's a doji day. It might do something coming into the close, but let's not overreact to a doji.
I agree. I'm looking at the Dow thinking probably an area that will have relative strength if the market does perform well. Look for safety. A lot of people are right now. These big companies usually do provide some of that, Matt. Biggest, most active company on the Dow today is Apple Computer. Let's look at Apple real quick and then go on to the NASDAQ as well. That's a bear retracement. Add that one to our bear retracement list.
Oh, there's going to be a lot of bearish retracements on the scouting reports this week, too.
Yeah, I like it.
The difficult part in that meeting we're going to have on Friday, that we have every Friday for the scouting reports, is going to be trying to figure out which ones are the best candidates. Because there's going to be 200 bearish retracements out there.
Well, and I spent some time on this in the option report last week, and I started with, guys, we actually have more bull picks than bear picks. If you look at the option report from the last weekend, we had more approved bullish picks than bearish picks. And I explained the reason is that as a trader, you always have to dig deep for both lists, no matter what, because you don't know where the market's going to go all the time.
Well, you don't, but there's going to be a reason there's going to be more bearish picks on those watch lists this week than bullish picks. Mm-hmm. There was a reason there's more bullish picks last week than there was bearish picks. It's based on what the market's doing. When the market is sold off coming into a support level, what's going to happen is you're going to find a lot of bullish retracements that are really, really good. You're going to find bullish high base breakout candidates that are really, really good. As the market is appreciating coming into resistance, you're going to find a lot of good bearish retracements. I mean, it's predicated on what the market's doing.
Mm-hmm. Give me the full NQ. Obviously, Apple very weak there in terms of bearish retracement, bounced for a couple of days. In ranking all of them, I've got this one last, even below the RTY, by the way, for me, because of the lower pivot low, lower pivot high. Where are you at on this one?
That's a bearish retracement, slightly bearish.
If you're looking for bear retracements, I bet we're going to find a lot of those in tech, Matt.
Yeah, tech and small and mid caps.
Yeah, most likely. Wynn Casinos, WYNN, one of the biggest losers on the NASDAQ here today. In fact, it's down 3.3%. That's a double type of W style pattern, even though that did hit resistance and sold. For me, I usually pause and hesitate on a pattern like this and go with something cleaner. That's messy in there, Matt, even though it's been bearish long term. Is that tradable for somebody out there?
It is tradable on a breakout, yeah.
Yeah. To the upside, not the
To the
downside.
upside, not to the downside. No.
Yeah.
And again, I sound like a broken record sometimes, but I want to keep on reminding people that a 3% movement after a market has been kicked in the face by 12% or 18% or 50% is not very much. It's just
Mm-hmm.
not. Look at the candles. 3%, big headline. Well, again, let's look at the current ATR on this stock. It trades $5 a day. It trades literally 5% a day. So 3% on a day when this stock usually trades 5%, that's actually less than what it usually trades. So don't get caught up in the headlines is my recommendation. This is a tradable signal above resistance. If you break out of this level, and it's not the test, okay, it's the close. It has to close above that level. If you close above 115, that is a tradable signal. Absolutely. That's a confirmation on a reversal pattern.
Mm. Deutsche Bank got raided. I'm looking at the headline here today.
It's going to happen to the worst bank.
I know that you do not like that company.
I hate Deutsche Bank. If you think I can't stand Goldman Sachs, you don't want to hear my rant on Deutsche.
Well, I do, but not right now. Bank offices raided in money laundering probe. Did they even change their symbol? DBKGN, I guess. Or man, they might have.
I haven't looked at it for a while.
DB used to be. I haven't even looked at that stock in a long time. They hit the headlines though today.
Yeah, it's still DB.
Yeah.
Again,
Bearish, ugly.
Could happen to a worse stock.
Yeah.
Where's the bottom, Deutsche? When you're 70-1 over leveraged, when you have $1 trillion in your bank and $70 trillion in derivatives, I'll tell you exactly where the bottom is. Zero.
Mm-hmm. Maybe that's why they were laundering. They were trying to make it back up.
They have to try something. Whoever's running that bank should be fired.
That's a good point. That's a good point. We're still on the NASDAQ here for a minute. Give me Facebook real quick. Did you see that probe that showed their internal emails were revealing the company was considering charging companies for access to their user data? So all this stuff that they've been denying and this and that, and they're trying to.
They're such a liar. Mark Zuckerberg's a liar.
Put this one on the bear retracement list.
Yep. I'm waiting.
Yeah.
It kisses 140, gives me any type of confirmation to the downside. That's a short for me. I can't stand this company.
Last bit of stock analysis before we move on to the other components, currencies and commodities. Let's take a look at the RTY small caps. And ding, ding, ding. I like this one a little bit better than the NASDAQ. It kind of reminds me very close to what the Dow is looking like, in my opinion, probably even weaker. I've got it third out of four.
Yeah. It's Dow, S&P, right, and then NASDAQ right now.
I agree with that. Yeah, stock markets. I mean, dojing, not a lot going on today. That is not necessarily true of all the commodity markets, Matt. Let's start with the dollar and move into our other components here, like we always do as we're breaking down the markets. And by the way, if you're out there and you're watching our halftime crew, a big drive and a big goal we have with this daily report is to show people how to approach their daily routine, and teach that step-by-step method. It doesn't matter whether you've been doing this for a month or for 10 years, Matt. You have to have a checklist that you operate from. And we always go through the same one.
It's also what you and I have been doing for years and years and years.
Yeah.
Right? Every single day we get on the horn on Zoom, or before that Adobe, or before that just on the cell phones there, and we'll talk about the markets, talk about the different tradable instruments, go through the stocks in those indexes to see if there's any potential trades, make some trades, that type of stuff. And it might seem like, wow, man, they talk about the same things over and over again. Yeah, the market changes every day.
Mm-hmm. Kind of a doji here on the dollar, Matt. Not a lot going on with the dollar index. I did see that the euro pound pair was crossing quite a bit. Euro was actually up really big against the pound. Currency markets have been moving this week. Dollar's maintaining a slight bullish bias. Now, here's the complication with this technical pattern, though. You now have slowing momentum. Okay. It's very subtle. It's not that.
No, you had slowing momentum on this pivot. I talked about it in the Forex report.
Mm-hmm.
How you had it slowing momentum both in terms of the time it took to set resistance as well as the price perspective. And so you had slowing momentum right here. You're still bullish because you got higher highs, higher lows. The problem you're now seeing is you're still slightly bullish because you're hugging this trend line. And this trend line is very important for the dollar. So you're still slightly bullish, but the problem is this could be a pivot that creates a double top. So you got to come off if you're a dollar bull, you got to come off that a little bit, especially if I'm wrong on the Fed. If I'm wrong on the Fed and they only raise one time next year, dollar should come down. It'd be good for gold, good for silver.
Yeah. This G20 meeting over the weekend, Matt, does it have more risk in the currency market, commodity market, or the stock market, do you think?
Stock.
Probably stock market.
The trade war conversation.
Yeah.
Most of the trade war conversation has been bullish for the dollar.
Mm-hmm.
Right? It's been very bearish for emerging market currencies, very bearish for, the Chinese renminbi or whatnot. But it's been good for the dollar, especially in a rising interest rate environment. But in the stock market, yeah, if you don't see some positive momentum coming from China and the U.S. out of the G20, yeah, I think you're going to get some volatility.
Yeah, I would agree with that. I'm looking at some of the headlines. Trump says he's close to doing something with China on trade, but he doesn't know if he wants to do it.
Go home, sit down. We've heard it before.
Yeah.
Oh, my goodness gracious.
Yeah, obviously currency markets can react to the Fed here in about an hour. So if you are trading Forex pairs, you'd be aware the minutes do.
That is what you're waiting for. Mm-hmm. That is what the dollar is waiting for today, is the FOMC event.
And then those G20 meetings do start tomorrow and Saturday. Saturday is the only day international currency markets do close down. They open back up on Sunday. With this dollar, obviously setting up with a doji, whatever the action is today and tomorrow will strongly dictate what happens in that Forex report this weekend, I'm sure.
Well, and it will. There's no doubt about that. Seeing how the market responds to the FOMC event today, seeing the secondary response like we talked about yesterday to key economic factors. If the dollar closes above 97 today, I will be more bullish on the dollar. That is a very important number for it. Also, if you're looking at potential trading off the FOMC event, that 97 handle is where you're kind of waiting for. You break out a 97 on any event, that's tradable from a day trade perspective.
Mm-hmm. Move on to crude oil, if you will. Start working down the commodities as well. Oh, crude's just bearish. It's been bearish for a long time. I know here today it is bouncing back, but you look at the overall trend, you look at the overall chart. There's nothing in this chart that screams buy or bullish or anything like that. It's fighting 50 though, which is very interesting. It's trying to hold 50. Obviously, traders psychologically are going to paint that line in the sand and say, hey, okay, we're going to fight for it one way or the other. But Matt, that makes anything below 50 as a tradable event. You now have 5 candlesticks that have hit a bottom point right at that 50 mark. What's your read on crude?
Same as it was yesterday. Close under 50. Buy puts on USO, short crude oil. I think that's what everybody's waiting for, to be honest with you.
Yeah, I think so as well. Looking up and down the commodity table here, all of the different energies are doing pretty well except for natural gas. It seems to have decoupled with all the other energies, by the way. Nat gas down 1%, but after a huge run, it's just up here at the top. You're now forming some resistance up here.
Oh, a very clear resistance at $4.75 to $5. Very clear.
Yep. Yes, gold, silver, copper. Let's take a look at gold. They're all pretty flat right now. Gold kind of holding that. I like a break at 1240, but I don't expect that this week. You never know going into Friday.
If you get a negative reaction to the FOMC event today with the dollar, right? Mm-hmm. Couple that with some type of positive momentum coming out of the G20, and that hurts the dollar. You could see the dollar break its support level. There's no doubt about that. And if the dollar breaks that trend line, Tim, you're going to see price appreciation on gold.
Yeah.
So there are key events in the next 2 days that could impact gold coming into next week, no doubt.
It's going to be an interesting market to close the week and obviously set us up for next week. It's nice to have a little doji day after huge volatility all the time. I mean, you like to calm down a little bit, but I think it's the calm before a storm. Markets are not going to doji into Christmas, okay? So we are going to still see quite a bit of up and down volatility from here, no doubt about it. And Matt, that's our halftime point of our halftime report. It takes a doji in this market to get to actual halftime at halftime.
It does.
During this event, yeah.
Usually we're 15 minutes 15 minutes later than this on a day where you have a lot of activity, no doubt. But I mean, it's a doji day. It's a boring day in the market. It's setting up.
Yeah. One thing that was in the prep that I thought was really interesting is Cody had a bunch of different components for ETFs for natural gas. We were just on commodities. UNG is one way to trade it. DGAZ, UGAZ, Boyle,
Yeah, right there.
KOLD, UNL. Guys, if you're out there and you're watching us break down all these commodities, you got to understand there's so many different ways that you can participate in markets like that
Well,
with the ETF
for
market.
example, Tim, if crude light / CL breaks 50 and closes under 50, I'm not going to short crude oil. I'm going to short USO. Right? That's the type of trader I am. So you analyze the futures, and sometimes I'll trade the futures, but a lot of times I'll trade the corresponding ETF that is, based on that commodity.
Yeah, I agree. All right, guys, Theta Thursday is the day where we talk about a cash flow component. Now, Matt, one of the things that I've seen through our, students and through the questions in the clubhouse and whatnot is that a lot of people really love those journals when they learn how to use them correctly. Traders who use the Theta Research Journal and the trade journals, they're usually better traders. You got to be organized. You got to be disciplined. Those are very, very important tools. So one thing that we decided to do here today, Matt and I, and we were doing some planning and prepping for the show, is to show you guys how to use that journal with the bear call spread strategy. And one of the reasons I like the bear call spread, and there's a bunch I would do in Theta, Matt, naked put, cover call, iron condor. We've got bear calls in there as well. And I think we have time spreads.
Yeah, we got diagonal, horizontal spreads. So basically you got your core Theta type of trades here. You have covered calls, short puts, bull put, bear call, iron condor, which is the combination of those two. Short strangle, time spreads would be like horizontal spreads, diagonal spreads, poor boy cover call type trades. And then you have one for resource links. And these are just, we need to update these. These are pretty old, but they're still, rules don't change unless they change, right? They're techniques are techniques. So, but then you have some videos that we did a while back. So if you're looking at it from a bear call, because the market's kind of coming into resistance, like we saw in some of those retail stocks coming into resistance, a lot of, I was talking to Cody about this in last week's scatter report meeting, where we were talking about putting those set trades out there on those bearish trades or those bullish trades and whatnot. And I was saying, a lot of people that are members of our community, they use those reports as a way to apply in their own systems, right? So some of the bearish trades, they'll do bear puts on them. They'll do bear calls on them. They'll buy straight puts on them. On the bullish side, they'll do bull calls, bull puts, and straight calls and stuff like that. So, in terms of that, it's really up to the trader to use those lists and those reports to fit their own trading, right? We're not giving recommendations. We're not telling people what to do. We're analyzing those from a technical perspective, giving price projections and stop loss placements and targets based on technical analysis. It's up to the trader to make that decision, how they want to approach that. Take Marie yesterday. And Marie, I thought you did such a fantastic job yesterday. Take Marie yesterday. I'll guarantee you, Marie takes those scatter reports and she doesn't trade the set method directional options on that. She's going to take those bearish picks and she's going to analyze those from a bear call perspective, or those bullish picks and analyze them from a bull put perspective, because technicals are technicals, right? So that's kind of how I use those reports as well. But in terms of the Theta type trades, right? A lot of times you want to run the numbers, and people don't like doing this. They want to get told what to do. But if you want to be a trader, you got to learn how to run numbers. And so what we did a few years back is we decided to create all these different trading journals to help our community in terms of, helping them assess those numbers, right? What numbers, how to analyze it, and so on and so forth. So Tim, if I'm a trader and all I know is I need one bear call in my account, I'm looking for one bear call, and I've been trading Amazon and Google and Facebook and Netflix, and I'll just go to one of those ones that I know I can get a good bear call on, that I know that that I know I can get a good credit on, and I know their technicals because the personality of that stock. But if I'm looking to make 2 or 3, 4, types of bear call trades, and I want to look at 10 to 15 different stocks, I'm going to come here to the Tackle Theta research spreadsheet, and I'm going to run the numbers.
Yeah.
And the cool thing about our journal, guys, is down underneath the actual spreadsheet, you got the trade identification, kind of the philosophy of the bear call spread, trade identification. You want a neutral to a negative 2 bearish bias. If you're looking at that from our scoreboard, that would be in the 40 to negative 10 type range. Delta rule, you want to sell delta 0.25 or lower. That's the axe. And when you're looking at that delta rule, you'll say, man, 0.25 delta. I want to go sell 0.25 delta. Well, I never sell a 0.25 delta. I'll sell 0.10 delta. That's the maximum delta you can sell. And then obviously you buy the next strike price lower. Here's your theta rule. You got to sell at least 3 months or less of time. But I typically will do 4 to 6 weeks of time on a bear call, just because that's what back testing has proved to be the best way to take advantage of theta. Volatility rule, decreasing volatility, just kind of understanding how volatility helps or hurts this trade. Position size, ROI targets, 70% on the ROID or higher, 10% of the spread sold. That's fine. We use the ROI target at 70% of ROID or higher. Stop loss techniques, target techniques. So you have a bunch of basic rules in there that you can help start applying as well as a trader. So it's not just this spreadsheet here that you fill out. You also have a couple rules down underneath.
I love these spreadsheets. And one thing that I would coach somebody on, and when I mentor somebody, guys, you're not going to just take one stock and go put a trade in, right?
No.
In fact, you don't want to put the cart before the horse and just run out and trade whatever the first one you find. You start with your market analysis. You dive down, you find patterns that fit the overall analysis. Think about just even this halftime report here today, Matt. We broke down the markets, and now because we've broken down the markets, we know bear calls are in play. Mm-hmm. So now bear call spreads seem like a logical trading candidate idea for a theta trader. You then go and I always say you want to have at least 4 or 5 candidates that you run the numbers on, even if you're only going to make one trade, because I want to have more choices than what I need available to do it. Now, I've got a list of about 9 here that would find interesting. I don't want to run numbers on 9 of them, Matt. Maybe 3 or 4 of them, though.
I'd say 3. I'd say 3 or 4. Yeah.
So why don't we rapid fire through a bunch of these, and then we can pick them together. And then if you have any extra ones as well, some of these, Cody, come on in here and let us know what you think as well. Some of these were in the prep. Home Depot was on the option report this week, Matt. Home Depot's in a beautiful bear retracement setup. It had a lower pivot low, but you had a couple of strong candlesticks down there on the bottom. Mm-hmm. CTRP was on the option report, stock report this past weekend, I should say. CTRP. Yep.
CTRP, I think, is my favorite thus far.
It's a beautiful one.
That's not a bear call.
that's a put.
You could do a bear call, don't get me wrong. Okay, but that's like that's an easy target of 25. That's an easy 10%.
Matt, you know why I would like a bear call on this one over a put, though? And here's my argument I'll make for that. Look at the implied volatility. It's going to cost you more, so I'd rather get the premium for selling than buying.
Mm-hmm.
Yeah, I'd have no problem with the bear call spread here.
Let's run the numbers.
I was just kind of laughing because the setup's so good. It was just like screaming short that stock.
By the way, what just happened is how theta traders get tempted into delta trading. Okay, so
all right, here, I'll give you your 10% ROI and I'll match you with 150% put option trade. Yeah, that's exactly the greed, right? The greed.
But you got to have your balance. C-Trip, let's put this one on the list. Let's run the numbers on it, one way or the other. Target.
Facebook too.
I like Facebook too, but I got 9 I want you to look at, then we'll pick 3.
All right.
So CTRP.
Okay, so CTRP,
TGT,
TGT, Facebook,
BBY,
Best Buy,
Apple, KSS, and JWN.
All right, so I got Kohl's, Home Depot, Set Trip, Target, Facebook, Best Buy, Apple, and Nordstrom.
And if we had time and if we wanted to, we could run it on XLK and show how the ETFs give you less premium, but you can play the whole sector. But
or you can just say they give you less premium.
Yeah. Okay. Yeah. So let's stay with the stocks.
All right. So I'm going to pick 3 out of these, and I'm just going to pick the ones that, look really good. Bearish retracement type triggers. KSS, really good bearish retracement there. Home Depot, really good bearish retracement on Home Depot. Little bit of slowing momentum and trend that certainly would not stop you from doing a bear call spread though. Cetrip, we were kind of looked at. TGT Target, that's a gap filled, tried, couldn't come back down. That's a good one too. Facebook, we already looked at. Best Buy, really good trend pattern there on a bear call there. Apple as well. Yeah, bearish. What do you say? It's getting its tail kicked. And the JWM we looked at as well. So, okay, so I'm going to run the numbers. I'm going to run it on, Facebook, because I just want to, short that stock, and bear call spreads allow me to short it. Let's go with Apple, and let's go with Home Depot, and let's go with Best Buy. They're all good, by the way.
Mm-hmm.
They're all good. And, Tim, if we had 20 more minutes, we'd run the numbers on all of them. But let me just type these symbols in. So we got Home Depot, we have Facebook, we have Apple, and we have Best Buy. BBY. Now, I'm going to basically, what I'm going to do, guys, is I'm going to take.
Now, we can do this a couple ways. We can kill 2 birds with 1 stone. I can find the numbers, just give them to you. And then you could go show how we find them.
Let me show them the first one on Home Depot.
Right.
And then you just give me the numbers, okay?
Yep.
Okay. So basically, guys, let me explain the numbers we have to get. So current price of the stock, current ATR of the stock, the month we're going to be selling the put options, or excuse me, the call options is. DTE stands till days till expiration. Short option strike is based on the delta you're going to sell, Tim. We're going to basically look at that and determine what delta we're going to sell. Short option delta, just based on the strike price. Long option is the option you're buying to hedge the short call option. That typically is a $5 spread, a $2.50 spread, a $2 spread, whatever it is based on kind of what the stock is doing. ATR buffer is automatically done for you. Same thing with the standard ATR buffer. I'll explain those. Net credit is the difference between what you're selling and what you're buying. I'll show you that here in a second. BPE stands for buying power. And then the alert is basically an alert that you put 1/2 strike price underneath the strike you're sold. That is automatically done as well. So here on Home Depot, let's go look at the okay, so Home Depot's current price is $175.45. The current ATR on Home Depot is, we'll just say it's $4.93, Tim. And that's right here is where my ATR was. If I go to the trade tab, now, Tim, the first question you're always going to have is how many days do you want to sell here? Right?
Yeah.
And typically you want to sell somewhere between 4 and 6 weeks. We typically go to a 30-day number. So I'm just going to go to the 29-day weekly option. Okay. And I'm going to do it on all of them on the exact same one. Now, so I'm going down to the 29-day weekly option, which is closest to 30 days.
Pause real quick. I have to teach this. Okay. You
okay,
grab my attention. What if somebody says why? Usually the answer as a mentor is because I said so.
Because I said so.
But the longer analytical that needs the answer, Matt.
Same as a parent. Because I said so.
Right.
I said so.
Just follow the rules, guys. I mean, that's what it is. But the reality is, Matt, there's a thing called the time decay curve, theta decay. And we know that there's a maximum efficiency of how to use our capital, right? If you did a 7-day option, some people will mistakenly believe, well, I can just get my money in 7 days.
No, you can't.
It's different. Those are more gamma sensitive. There's more to it. And I don't want to go down the rabbit hole here in the halftime report.
Well, that's the problem with it, though, T, is that when you're trying to teach something in an hour-long session, you can't do that.
Yeah.
I mean, it's really hard. That's why you need coaching and mentoring and, advanced education and whatnot. But, in terms of understanding it, here's why you don't do the 7-day numbers, because I'm not analyzing a 7-day number. If you want someone else to analyzing a 7-day number, go find somebody else's community, somebody else's system, somebody else's trades, and go figure it out on your own.
Trust the system, trust the process, trust the rules.
You can either trust the process, or I can sit there for the next 4 hours and talk to you about how gamma impacts delta and how that impacts theta coming into the last 7 days of the trade, and how we usually don't want to, stay in theta trades in that capacity. Or you can just say, let me sell 30 days and get my 10% ROI.
Yeah. Yeah. There's a lot of different ways you can get people to a point where they're confidently trading. There's no question about it. One of the reasons why I love these checklists and structure and rules and everything that we do is the same reason we like a cookbook or a recipe book, Matt. And like you did mention, these rules are in that theta spreadsheet. I don't usually let new traders ask why until they have traded enough to have a good, deep conversation, right?
No. Tim, a mentor once told me when I was asking why, if you ask that again, I'm leaving. Because it doesn't matter at this point. That's the reality of the situation. Here's the why. The why is because over the last 15 years, we have made millions upon millions of trades in our community. Greg
Jones, one of my favorite. He said
it's true. It's true. It's the most boring topic of all time. It is. I agree with Greg. Please talk about gamma. Yeah. Or we can just run our numbers.
C'est la vie.
You're a deep dive. Okay. Anyways, I'm going to start with right around a 20 delta is what I'm going to start with. Okay. So I want to make sure that my 20 delta, I'm selling somewhere that I feel comfortable with. Okay. Now, right here at the 185, Tim, that's the 19 delta. Do you feel comfortable selling the 185 contract? I'm going to ask you guys. It's a 20 delta.
I do feel comfortable with it, but here's what I know I would do. We're not doing that right now. I would run the two numbers. I'd build them twice.
I would too, but the simple reality is we're going to sell above that pivot.
Yeah.
Right.
I would run both and look at and see and compare them. In the spreadsheet, by the way, many times I'll take the same stock and run it 2 or 3 different ways at the 19 delta, the 10 delta, or whatever it might be.
Sometimes on different time frames too.
Correct. Yeah,
right?
correct. Yep.
29 days, 2 days, and so on and so forth.
Yep.
But because you got this resistance pivot right here at 188, anybody who's been in bear calls and they look at that 19 delta, they're like, oh, 81% probability. That's fantastic. And then anybody with, 50 bear calls under their belt, they're like, oh yeah, that's going to get tested. Right. So sell above that resistance level. And so I'm going to go up to the 190 strike price on that one, Tim. The 190 strike price is right here. It's the 10 delta. So the 190, it's got a 10 delta. I'm just going to wrap a $5 spread around it at 195. Mm-hmm. Let's go fill out some numbers here, T, on Home Depot. All right, current price is 175. What was it? 45. ATR is $4.93. The month we're selling was in December. That, by the way, the month is not important in any capacity. We just want to make sure people know what month they're trading in.
Yeah.
It's the days till expiration that's important.
Yeah.
Now, in terms of the short option strike, that's the option that we're selling. That was the 190 strike right above that 187 pivot point. Mm-hmm. That had a 0.10 delta. The long option was 195. Now we got to build the trade. The net credit here is what you're receiving on the credit from selling the bear call. So if I right click, yes, Tim, I am right clicking.
This is the reason.
Oh, just left click it. Just left click it and be done with it.
You new age people.
What you have to do right here is the reason why we left click, by the way.
Exactly. I can have that built already.
That's not true. Okay, $26 off $4.74 buying power. All right, so let's come back to the spreadsheet here. And net credit would be 26. I'll tell you right now, this is not a very good bear call spread.
I agree.
I could have told you that off the IV.
Oh, I could have told you that based on when you said Home Depot.
Well, but here is an argument for it, though. It's a more stable company. 5.5. I'm not going to ever let somebody complain about making 5%, though, Matt.
You should. You absolutely should. A 5.7% on a bear call spread, 29 days out with the 57 roid. Come on.
I'm not saying it's great.
I know you. You would never make this trade ever.
If somebody wanted to make an argument to make the trade, I would listen. I don't think it's completely disqualified instantly. That's why they're yellow, not red over here, by the way. It's a low ROI trade on a low ATR stock, but it's not the one we're going to take. There's no question.
Listen, I built Royd. 57 isn't good.
But it doesn't disqualify it.
It does for me.
All right, so moving on to the next one. So I actually pulled some numbers for you guys to be quicker.
Well, let's hold on real quick on that one. Let's look at Facebook just to kind of help understanding the, ranges. So going down to the 19 Delta 150.
Well, that I didn't pull. I just pulled the price and ATR for all of them.
Yeah. Okay, so Tim, question is, would you be comfortable selling the 150 call option? So the 19 Delta.
Yeah, it's right at that 50-day moving average. You're about, what is that, $12? So about 2.5 ATR. I'd probably want a little bit more cushion personally. I would want a little bit more cushion. That ATR buffer, by the way, and I always say this when I'm teaching this concept through the spreadsheet is a critical component of the way that I coach people because it structures them. It gives them discipline and organization and all that kind of stuff. There's 3 C's: cushion, okay, chart, and credit. Credit's the least important for me. You don't just run all the numbers, take the highest ROI. That's not the way that it works. Okay. So I need to have enough cushion on that ATR buffer.
You take the highest ATR buffer versus Royd. That's what you take.
Yeah. Right? Those 2 concepts are probably the most important in the spreadsheet, in my opinion. And so I would want to go further than 150 because of the buffer. Right. Okay.
So I'm going to go to let's go to 150, 250, right above the 50-day moving average.
Yep.
That puts us at a 14 Delta. I'm just going to do a $5 spread here, 157.50. Stock price 138. What was the ATR, Cody?
It has exploded recently.
I'm on mute. Yeah, 4.68.
4.68.
4.68.
Yep. 20.
And so 152.50. That was a 14 Delta. 157.50. Net credit. Should have got it while I was there. I just do this to bug you too.
Oh my God! Now you are.
No, it's okay. It's an opportunity to exercise patience, Cody. You got to look at it with a positive light at all times.
I can right click faster than you two can left click, and I can promise you that. If you want to test running numbers, I'll test running numbers with you too. I'll give you guys a head start is what I'll do.
We'll do like a side by side, like you'll see the people on the screens playing Tetris against each other, but we'll just be making trades.
Yeah.
Listen, I will go log into Black Ops, play some zombies, and still run more numbers than you two.
Calm down.
All right, now you're getting a little intense here.
I'm fighting you two on this one. All right, net credit would be $42. Buying power is just okay. Now, buying power, very quickly, for those of you who don't know, it's just the difference in your strike prices. So if you're selling the 152.5, buying the 157.5, you have a $5 spread. So $5 spread equals basically, $500 per contract because each contract controls 100 shares. So then you minus the credit received, and that's your buying power. So if it's a $5 spread, $500 minus the $42, that's going to be your buying power. And if you don't know how to figure that out, TOS does it. Your broker software does it. It's right here, buying power 458. So coming back down to 458. Okay, now Tim, this one, okay, and this is important because these are 2 different trades. The first one has a 10 delta. The second one has a 14 delta, right? So obviously when you sell a lower delta, you're going to have a less ROI. So if all you're looking at is this number, you're like, oh, I'm going to get the 9.2. Well, that's not the most important number. The most important number is this number right here and this number right here. So here's what kind of stands out to me, Tim. We're selling a higher delta on Facebook, okay? But we have a higher ATR buffer.
Correct.
What do you think about that?
It's really interesting to me because usually that would be inverted.
Usually there's those inverted,
yeah,
right?
Yeah.
That's a positive thing for Facebook, right? Okay. You're also,
and by the way, real quick note, it's harder to get great buffer on bear calls than it is bull puts because
absolutely.
the market naturally builds more cushion into puts.
I honestly, Tim, I'd say at least one ATR. At least one ATR. You could sell a 10 delta versus a 10 delta, and you'll have a higher ATR buffer on the put versus the call. No doubt. All right. And by the way, you also have higher volatility on the puts, which means you get higher credits on bull puts versus on bear calls as well. All right. So let's look at Apple here. So Apple.
You stay on the spreadsheet. I'll give you the numbers.
Well, let's, okay. Just give me let me get you the one. So here on, we got to sell at least above 195, correct?
I would agree with that. Yeah.
Least above 195.
29-day option is what we're thinking.
I think you could do 195 by 200. So give me the numbers based on that, Tim.
Gotcha. Okay. First one is price 178.64.
Give me that again, T.
178.64.
178.64.
ATR 6.42.
6.42.
We're going to use December 29-day options. 195.
What's the 195 put? I mean, what's the 195 delta?
0.15. So it'll be similar to that Facebook trade. 200. Your credit is 50 cents on 450.
Okay. Now, looking at Apple in comparison, Home Depot's out for me. So let's just get rid of Home Depot. Okay, give me a bad. You're bad. Get out of here, Home Depot. Okay.
Is there good?
Facebook are good. Facebook and Apple are good.
Right.
Okay, so Home Depot, just go away. All right. Now, on Apple versus Facebook, slightly higher on the ATR buffer, much better on the credit. Now, Tim, if you only needed one, because you could do both here. Both numbers are decent. I mean, I don't love the ROID on Facebook, but I do like the ATR buffer. So ATR buffer is better on Facebook. Credit and ROID are better on Apple, which means you have better probability divided by ROID or ROI. So what ROID is, guys, okay, and I agree with Marie, it's average. 68 on the ROID is not great.
Yeah.
What ROID is, let me explain this, okay? Now, if you look at the spreadsheet here, guys, if you just kind of highlight it here, everything's relative to 30 days. And that's what I always use it as, because sometimes you'll look at different time frames. You look at a 45-day number and you're like, oh, I'm getting 18% ROI on a 45-day number. And you're like, wow, that's fantastic. But I'm only getting 14% on a 30-day. And it's like, well, no, I'd rather get 14% in 30 days versus 18% in 45 days. So what ROID is this, guys? Years and years and years ago, when Tim and I were first learning how to trade, the way they taught credit spreads was basically this. You want to get at least 10% of the spread, okay? And what that means is this. If the spread is $5, you want to get at least $50, correct?
Mm-hmm.
That's 10% of the spread.
Mm-hmm.
And that's how they always taught it. Everybody, every trading education firm out there taught that same type of technique. You want to get 10% of the spread, 10% of the spread, 10% of the spread. And one day in 2011, I'm sitting down and I'm doing a lot of research on credit spreads. And this was after I'd stopped being director of Rich Dad Education. And I was just sitting in my home, 2011, and I'm sitting there going, 10% of spread makes no sense. It makes no sense because it's missing data.
It's too arbitrary.
And the data it's missing is probability analysis, okay? And I called up Tim and I said, Tim, I'm going to give you two trades. And I said, Tim, you get 10% ROI on both trades, okay? Which is basically 10% of the spread, right? You get 10% of ROI on both trades. But you're on one of the trades, you've sold a 10 delta. Mm-hmm. And on the other trade, you've sold a 0.20 delta. Which trade do you do? And Tim obviously says, I do the 10 delta. I said, well, then why are we teaching people to do 10% of the spread when that's not the complete analysis, right? And Tim didn't really know what I was doing in that conversation. I don't even know if Tim remembers that conversation. But a year and a half later, after I had basically researched and back tested and ran numbers and everything like that, I basically created Royd. And then I created all the different substats. So good Royd has to be over 70, average Royd 50 to 70, under 50, you just never can touch it. And Royd is different on covered calls versus naked puts versus bear calls versus iron condors, right? Royd will change based on those parameters. And I remember sending it to Gino and Noah in 2013 after I met with Tim in 2012 on it. And I sent it to Gino and Noah and I said, guys, I'm a little hesitant here because whenever you create something new in trading, Tim, what are other traders going to do?
Well, they're going to pick it apart. I mean, obviously, especially it's like chefs. We all know what ingredients we like and whatnot. I mean, they're going to pick it apart. They're veterans. They've got their own way. Yep.
Not because they're being jerks or whatnot. It's just that's what I do too, right? Yeah. Tim, if you send me something, what's the first thing I do? I look at the problems with it, right? I look at all the variables to it. So I sent it to Noah and Gino, and I laid out my argument over Royd and what it is, and both of them are like, this is awesome, right? Mm-hmm. So ever since 2013, Royd has kind of been the standard about how we go about, ranking different types of credit spreads and so on and so forth, because what Royd does is it doesn't just take into account ROI, which is based on 10% of the spread, that old educational principle in trading credit spreads. It takes the ROI and then it divides it by the delta that you're selling. And then it gives you a range, a percent range that is good versus bad. So it takes into account ROI and probability is what the Royd does. Mm-hmm. I just wanted to take a moment to explain that.
Well, first of all, I love it. And Matt, for years, I saw people making mistakes because naturally your greed is going to think when you're new, well, that 11% is better. It's not necessarily better. And we know that by doing this deep dive analysis. I'm going to give everybody a call to action here that's watching the halftime report. Go and download the spreadsheet and practice on a few of your own, fill them out, learn how to fill them out. I usually keep a blank version and then I will save it with the date. And I have a bunch of old ones that I've run and then I'll always reopen the blank one. But
I always just open a blank one and, run 25 different numbers or whatever we're doing. And by the way, when we do the tackle 25, this is the spreadsheet Tim and I fill out for 2,000 different stocks. It's a nightmare situation. But in terms of that, download the spreadsheet, guys. Use the spreadsheet. It's for all pro members. You get it free. We don't charge pro members for our spreadsheets and whatnot. All right. So Tim, Best Buy. Let's do our last one. So
sure.
Just give me. I'll get you the strike price we want to sell. So
the Best Buy is 64.43. ATR is 3.
Hold on real quick. T, at a minimum, I would say you got to sell above 70.
70 is only going to be less than 2 ATR buffer, which I know will disqualify. So that's a good call. I agree with that technically, but I think you got to go above 72, 72 and a half.
Let's go 72 and a half by 77 and a half.
Yeah.
And mind you, I might do a 2.5 spread there, but I just want to keep it consistent with the other ones.
Mm-hmm.
Okay. So Cody, give me the price.
64.43. ATR is 3.
Strike was 72 and a half by 77 and a half, right?
You can't really play that 77.5 though. I don't want to go too technical, but there's
fine. I'll go 75.
Yep.
Okay. Delta.
On the 72.5, it's 0.11. And on that 2.5 point window, it's a 13-cent credit. I got you, Matt.
13 cent.
Mm-hmm.
I'm assuming you left clicked that and got it really quickly.
It wasn't a fair race. That was like the foot race in Seinfeld. I took off 3 steps early, so I won't claim victory on that one.
He had a head start on that one. Yeah. 487.
No. 2.5 point spread. So do 237.
Yeah, 237.
Mm-hmm.
Okay. Now, there's obviously telltale signs whenever you start doing this. Knowing you're getting $13 on a 2.5 spread, you already know it's going to get violated. But in looking at these four, Tim, if I was looking to play one, okay, and I want to get all you guys' take on this. If I was just looking to play one, I would do Facebook. I like the ATR buffer on it. I'll give up a little bit of the ROID, a little bit of the ROI, but I like the ATR buffer on it. Plus, I like the trend better than Apple. Apple can snap back.
Cushion, chart, credit for me.
I'll take Facebook also because that 150 is major resistance back to April. So you add that in there.
Both Facebook and Apple are sixes in my opinion.
Both are good. If you're looking to do two, yeah, we're splitting hairs between Apple and Facebook. I like the chart on Facebook a little better.
If you were prioritizing the chart, though, I mean, the entry on the candlestick, Apple's on a red candle, Facebook's on a green candle. Facebook's at resistance.
Yeah, but selling credit spreads, you don't need to wait for the finite confirmation like you do when you're swing trading.
Yeah, I think I would lean on Facebook if I had to pick one. And really this exercise, guys, if you're out there and you're watching this halftime report, I'll give you a challenge. If all you did every day for the next, say, week is pick one of those tabs and fill out 4 or 5 of them just so you could practice, you would be a much more competent credit trader and theta trader by next week,
Well, and what I would suggest, guys, is take those option reports this weekend and practice bear calls. Traders are going to trade whatever they do in their live account. That's up to them, their responsibility. But in virtual trading, practicing, I would take every bearish retracement off that options report this week, and I would virtual trade the bear call spreads.
And by the way, I gave Coach Tyler the directive that tonight's Cash Flow Club is going to be a deep dive into bear call spreads. So nice. If you are a Tackle Trading Pro member, remember Cash Flow Club is tonight, 8:30 p.m. Eastern. We'll join in on Zoom, and we're going to continue this same topic there tonight, Matt.
Awesome.
We're late, but that's okay.
Guys, if you enjoyed the deep dive we did today on the spreadsheets and kind of whatnot, make sure you give a like and a nice little share. We always appreciate that. And until Friday Fun Day tomorrow, Tim, we're going to be teaching a concept. And what should we teach tomorrow? What do you guys want? Let's leave it up to you guys. Everybody, give me the one thing you want me and Tim to teach for 30 minutes tomorrow.
It's a good question.
Don't care. It could be an indicator strategy, fundamentals, intermarket analysis, you name it. Don't care. Give me a list, and then we're going to put a Twitter poll up. You're welcome, guys. Love the halftime crew. So what would you want it, given what the market is doing today, Tim, given that we have the G20 tomorrow, given the neutrality in the market, what would you want to learn? If you were part of our how to Fibonacci the fix. Oh God, that was great, Nathan. Oh, so Tim hates Fibonacci and I hate the VIX, so we should do a deep dive on Fibonacci and the VIX.
We're not doing that. It's Friday Fun Day, so we're not.
Oh, come on.
If I was a new student and I did not know how to do a neutral strategy, I'd want to know how to do a neutral strategy. If I was brand new and didn't have training on hardly anything, I might want to do like order entry, but if I'm a veteran, a lot of our
We've done a lot on order entry though. We've done a lot on contingents and whatnot.
Well, on neutrality, you also got to look, do you want to do neutrality with a low volatility or neutrality with the high volatility? Two different ways to look at it that way.
Yeah. You know what because a lot of times the subtlety is what really matters, I think, in life and how you make decisions. Like even right here, the debate between these different four, there's obviously nuances and subtlety to that. So what I might want if I was out there is for us to look at like 4 or 5 companies that are all in the same pattern and talk about what makes them either stronger or weaker, depending on some of those subtleties, like candle size or dojing or intraday, whatever it is. Friday is our scouting report meeting, right? And by the way, Matt, and think about what we do in that meeting. We debate over hundreds of companies to whittle it down to the 10 or 12 that go on each side of those reports, And so I don't know. Dude, we're going to put it up on Twitter. We're going to let them vote. So You know,
Yeah, okay. I got. Thanks for everybody for putting that on. I'll pick 4, and Cody will get it up. So, guys, go over there to Tackle Train's Twitter account sometime today and vote on the one you want us to do. We did, Christian, debate Crocs last week. 2 weeks ago, Bo Moody, and many of you guys know Bo Moody. He was my manager out there on the road for many years. And great guy. And he wears Crocs, and I've made fun of him for wearing Crocs for years and years and years. And he loves Crocs. He bought me a pair of Crocs for Christmas one year. I don't think I ever wore them. But Crocs, somebody nominated Crocs to get on the bullish list 2 weeks ago. And what's the symbol of Crocs?
CROX.
CROX.
And it actually worked.
It worked. It actually works very well. But 2 weeks ago, it was right into here. And I was like, no, I am not putting Crocs on the bullish scouting report. It's not happening. I'm asking that for Bo Moody. And then the week after, sitting here at support, I'm like, yeah, okay, we'll do it now. No, we were just joking. But guys, who here, and I want to ask you guys this, who here would like to sit in on that scouting report meeting? It's got to be a pro member. I'm thinking about having a few pro members sit in on that scouting report meeting, Tim. I'm considering it.
It's got to be halftime crew.
It's got to be halftime crew.
Yeah.
Viewer discretion is advised.
It's going to be a click and agree.
It's not PG. I'll say that. Yeah.
No, it's not. It is not PG.
From me, it is. By the way, listen. I mean, it is what it is. I
have a little bit of a we'll just say potty mouth.
Don't say that.
Yeah, don't say that.
That's how you describe kids with them. Well, I want to start swearing right now. Just
okay. So the last week when somebody nominated one pick, that is the dumbest effing pick.
No,
we can't do
that. Gentlemen. All right.
I'm just saying it's traders talking to traders without a filter, guys. Yeah. So we have to go through tremendous data in a quick time frame. And it's just, it's grown up. It's a grown up, right? So, yeah, what a surprise. I know, Greg. It's something I've been battling with in my life. I'm trying to improve every day. Let's
think about this.
Let's have 2 or 3 set in. I want that.
Not a bad idea.
All right. So here's how I'm going to pick.
If your name is Marie, you're picked. All right.
Yeah, Marie's already picked.
Yeah.
Whoever can make me laugh on Twitter today gets an invite to the scouting report tomorrow. That's how I'm going to pick. If you can make me laugh on Twitter and you're halftime crew and you're a pro member, you have to be a pro member, you have to be halftime crew, and you got to make me chuckle on Twitter today. That's how I'm picking.
That's kind of cool. You better make sure they know your Twitter handle, by the way.
At Matt Justice 13. That's my handle.
Yeah. Or is it at Justice Matt 13?
It's at Matt Justice 13. That's what my Twitter handle is. Tim Justice Utah. Cody, what's your handle, just in case?
I'm rarely on mine. I'm usually just on the tackle one. I have no idea what my Twitter handle is.
All right. Anyways, I am late for a meeting. So, guys, thanks for being awesome. Halftime crew, we love you guys. We'll see you tomorrow, same time, same channel. Thumbs up to you guys. Cody, Tim, great work today. We'll see you guys tomorrow.
Cheers.